Welcome back. You're still watching the Money Show on ET Now. This is the NRI special. We have Ved Jain, the former ICAI President, joining us to take the conversation forward. Mr. Jain, pleasure chatting with you on the Money Show today. First things first, I'd like to know who, according to the tax norms and tax laws, is essentially termed as an NRI.
See, the status under the non-resident under the income tax law is different than the status of a non-resident under the FEMA. Under the Income Tax Act, it is the number of days that a person stays in India on the basis of which it is decided that whether he is a resident or non-resident. If a person has been in India for a period of 182 days or more, then he is considered to be resident. But a person who has not been in India for a period of 182 days or less more, then that person is considered to be a non-resident. However, there are some conditions when you live in the first year, and then there are certain concessions which are given, and then there is a certain other rule that how long you have been in India in the last 4 years, if the total period has exceeded 730 days, etc. I will not like to go into the complexity. The basic rule in income tax one need to understand is that one person will be considered to be resident if he has been in India for 182 days or more. That's the one rule, basic rule one need to understand.
What about the key differences in tax treatment of an NRI versus a regular citizen of India?
I could not get you. Can you get back again?
Yes, I want to understand when it comes to tax treatment, what are the key differences between an NRI and a regular Indian citizen?
Yeah. You see, the question is when you are a resident of India, in India the taxation is not based on citizenship based. In the US, the tax laws are applicable according to the status as a citizen. But in India, the tax laws are based on whether you are a resident or a non-resident. If you are a resident of India, you are liable to pay tax on your global income, irrespective of the fact of which country you are the citizen. But if you are a non-resident of India, irrespective of the status of your citizenship, you are liable to pay tax only on that part of the income which has accrued or arisen or has been received in India, meaning thereby any income which accrues or arises or has been received outside India is not chargeable to tax. That's the basic difference which is under the Indian tax law is there.
Okay, all right. What about the incomes earned by NRI that are taxed in India and those that are not? Can you tell us the difference?
See, the income which is, the question is if a non-resident operate in various parts of the world, whatever they earn outside India is not chargeable to tax. But if they repatriate the money here in India, or if they hold some assets in India, or if they make investment in India, there are certain rules which gives exemption, there are certain rules which do not give an exemption. If you are a non-resident and if you are keeping a money in a foreign account which we call an FCNR account, foreign currency non-resident account, any income received on that interest income is not chargeable to tax. But if you keep the money in an Indian rupee account which we call NRO account or a non-resident rupee account, in that account the income is chargeable to tax and you are liable to pay tax on that account. So these are the basic differences on this account where they are taxable. Similarly, when you make an investment in India in certain equity and you earn dividend, etc., or you earn some income, so whatever you have earned from that part is chargeable to tax in India, and capital gain arising on that part is also chargeable to tax in India. The only concession is that the money which you have earned can be repatriated and can be taken back outside India. So that's a basic difference which has been which is between resident taxation or a non-resident taxation and the benefit which is given to a non-resident.
Okay. What are the various investments an NRI can make in order to save taxes?
See, the investment in India, question is when you make an investment in India, there are portfolio investment which comes up. So there are certain sections which gives a benefit to the non-resident. As I said that if you have an FCNR account or you have a non-resident external account, so whatever you earn thereon as a interest, etc., that is exempt. Similarly, when you make an investment as a non-resident in certain particular portfolio, So there is a specific provision under section 115A which gives you a benefit that the income earned from that is chargeable to tax at a concessional rate of a 10%. So that's a benefit. Moreover, now equity investment in India where you earn a long-term capital gain is otherwise tax-free because there is in the listed shares. So that's an exemption which is available. Similar, but by and large, other income as a non-resident, whatever you earn in India is the same rate taxable, applicable to the same rate. Subject to certain treaty which we have in Mauritius and the Singapore in case the investment come through that route. So there are certain exemptions which are complex exemption, but there is no other specific exemption to a non-resident as it is for any income which is earned in India.
Okay, just one last question. Are gifts given by an NRI relative to his or her relative in India, is that going to be taxable? And whether the NRI will be taxed on it or will the recipient be taxed?
Can you come back again? Can you repeat this question?
Yes,
please?
I'm asking, are any gifts given by an NRI to their relative in India, is that taxable?
No, you see, the gift tax provision is very clear in India. Any gift received from the specified relative, which is a list, irrespective of the fact from whom, whether it is a resident or a non-resident, is not chargeable to tax. Say, a gift given by the son to the father in India, if the son can be a non-resident, he can give a gift to the father. Similarly, a father can give a gift to the son, or a gift given to the brother, give to a sister, or a brother's wife, or the sister's wife. All these fall in the specified relative list, which is given in specific provision of section 56 to 10. So gift given by a resident, non-resident to a resident relative which fall within the category is taxable. But in case the person to whom gift has been given, the person who has received the gift from a non-resident is not a relative of the non-resident, then such gift will be chargeable to tax. I may also add further that now gift received by non-resident is also chargeable to tax in India. If any non-resident receives a gift from a resident Indian after 5th July 2019, that gift is also chargeable to tax even in the hands of a non-resident. It subject to the basic threshold exemption of rupees 50,000 which is available.